All right, today we're going to pull back the curtain on one of the most powerful yet kind of overlooked corners of the entire digital economy. We're talking about crypto data aggregators. And listen, this isn't just about some price charts. This is a really high-stakes battle for the intelligence that underpins trillions of dollars in assets.
Okay, so here's how we're going to break it all down. First, we'll get a handle on who these hidden gatekeepers are and why they matter so much. Then we get to the main event, the clash of the titans, CoinMarketCap versus CoinGecko. After that, we'll meet the specialist fighters, then the new challengers who are built for speed, and finally, we'll look at what this all means for the future of intelligence itself.
So first up, Web3's hidden gatekeepers. To really understand this whole battle, we have to start with the fundamentals. What is the power that these platforms actually have? As you're about to see, it's a lot more than you probably think.
At its core, a crypto data aggregator is basically the foundational data layer for the entire Web3 world. Just think about it. They take this chaotic mess of information from thousands of different exchanges and blockchains, and they turn it into something that actually makes sense. It's the real-time intelligence that powers pretty much everything, from trading bots to these super complex financial products.
And the stakes here, they couldn't be higher. This foundational data layer supports a crypto asset ecosystem valued at a mind-blowing $3 to $5 trillion. Yeah, that's the scale we're talking about. Literally every price you see, every portfolio you track, it all relies on this hidden infrastructure. And that brings us to our main event. For years, this massive market has been dominated by two giants. It's a classic duopoly story, right? And their battle really defines the entire landscape for millions and millions of people. First up, you've got the original titan, CoinMarketCap. They were founded way back in 2013, and they pretty much became the industry standard. But the whole game changed in 2020 when they got acquired by Binance, the world's biggest crypto exchange. Now, with over 200 million monthly users, their influence is just immense. Their methodology is key here. CoinMarketCap uses a liquidity-weighted model, which is actually great for stability. But, and this is a big but, it also creates a well-documented potential for bias toward the Binance ecosystem.
So, in the other corner, you have the independent alternative, CoinGecko. They've always positioned themselves as the neutral player. They even pioneered this unique trust score algorithm that looks way beyond just trading volume. They have incredible depth, pulling data from over 1,700 decentralized exchange pools, and they've earned a ton of institutional trust with a major security certification. Their independence, though, that might be up for grabs, with rumors swirling about a potential $500 million sale on the horizon.
So let's put them side by side. This matrix just perfectly illustrates the trade-offs. You've got CoinMarketCap's methodology, which leans towards the big exchanges, and that can create bias. Then you have CoinGecko's trust score, which is more holistic, but, can be a little subjective. Coverage-wise, CoinGecko is way ahead on new tokens, but CoinMarketCap has those deep roots. And then you see the risks. CoinMarketCap has had major outages, while CoinGecko is struggling to handle all the new AI traffic. And look, these risks are not theoretical. This is the crucial point. When these centralized systems fail, the consequences are absolutely catastrophic. A single 47-minute outage on CoinMarketCap led directly to $250 million in wrongful liquidations. That's the real-world cost of bad data.
All right, let's move on to the next round because this is where things get interesting. Beyond the big two, a whole new class of fighters has emerged. And they don't compete on breadth, they compete on depth. They're carving out very specific, very high-value niches.
So meet Messari. They call themselves the Bloomberg for crypto. They're not about real-time price feeds. No, they're about deep, qualitative research. They're the ones producing the big governance reports and the long-form analysis that venture capitalists and serious researchers rely on to understand the why behind all the market moves. Then you've got Glassnode, the on-chain macro forecaster. These guys are famous for creating these incredible metrics that analyze the behavior of crypto holders to signal major market tops and bottoms. You can almost think of them as market psychologists, reading the mood of the blockchain itself to predict those big long-term trends.
And finally, there's Nansen, the ultimate blockchain detective. Nansen tracks over 300 million labeled crypto wallets to see what the smart money, we're talking big funds, influential traders, what they're buying and selling in real time. If you want to know who is doing what on-chain, Nansen's got the answer.
But the fight is far from over. A new generation of challengers is stepping into the ring.
And these platforms are leaner, they're way more transparent, and they're built for the new demands of DeFi and, of course, artificial intelligence. The leader of this new school is DefiLlama. It completely changed the game for tracking assets in DeFi. Instead of relying on centralized APIs, it uses a transparent open-source model where the community itself contributes and verifies the data directly from the blockchain. It's just radically transparent.
And the result of this model? Well, DefiLlama accurately tracks over $350 billion in assets with a stunning 99.5% accuracy rate. This is just powerful proof that a decentralized, community-driven approach can not only compete with the centralized giants, but can sometimes outperform them.
And the innovation is just speeding up. On one hand, you have players like Birdeye, which gives you that lightning-fast data you need for high-speed trading on new blockchains like Solana. On the other, you have platforms like Chainbase, and they are building for the next frontier. They're essentially creating a translator, converting all this raw, complex blockchain data into a structured format that AI agents can easily understand and act on.
So, where does this all lead? In our final round, let's kind of zoom out and explore what this intense competition for data really means for the future of technology, way beyond just crypto.
See, this battle is so critical because the data these platforms provide is becoming the fuel for, well, everything. AI agents need these low-latency feeds to function. Decentralized physical networks, or DePINs, which are things like community-run sensor networks or robotics fleets, they need them for pricing. And the Web3 oracles that bring real-world asset data onto the blockchain, they are completely dependent on them. The roadmap for the future is actually becoming pretty clear. The industry is moving away from just trusting centralized companies and moving towards a system of verifiable intelligence. This means using advanced cryptography, like ZK proofs, to create digital receipts that prove data is valid without even revealing the data itself. It means using decentralized AI for analysis, so no single company controls the insights. And it means building native plugins for real-world devices to connect them directly and securely to the blockchain.
Which leaves us with one last really crucial question. As AI becomes more and more integrated into our financial and even our physical world, the source of its data becomes one of the most important decisions we can possibly make. The battle for crypto intelligence, at the end of the day, is really a battle for the future of truth. So who will you trust? Thanks for watching.